The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Good morning, folks. Welcome to Tiger Financial News Network. We're going to start out the show today by talking about the market in soybeans. And why am I getting an echo? There should not be an echo here. Let me double check here. See if there's an echo. There we go. All right, let me see why this mic is not working the way that it should. Give me 1 second here to check something out here, and we'll see if it works any better. That got rid of it. Hopefully the what are they calling? Hope the sound is better now. We're going to talk about soybeans this morning. There's an article that came out this morning from the Weather Bureau from Australia talking about the El Nino that's hitting the El Nino that is hitting the the southern part of the hemisphere, and it's affecting all parts of the countries, Asia and North America, and this could cause some crop problems. We moved 70 cents off the bottom from the chart that we posted in here from May 26th when we made the low down at 890. 899. The number we were looking at was 903. We've had a good run here. The market's up 8 days in a row, really strong, and that usually is set for a pullback. But frankly, if you get more than a 30-cent pullback in this, I'll be surprised because the way that it took off. But you want to be watching for a shorter-term pattern to either get long if you're not long or add to positions while you can. Now, this situation will probably last no longer than a couple months. By the end of August, this should all be over. The El Nino would have come and gone, and the prices will be high, and everybody will be talking about the shortage, and that's when you want to be looking, possibly to go sell. If you'll notice in this article that I posted in here from Australia about the weather, they said that the El Nino was as strong as the one from 1997 and 1998. Well, that only produced a rally of about $1.50 in beans, but that was when they were trading in the $7 range. They went from, I believe, 6 to about 7.5, which is a pretty good about 30% move. That would mean our beans would have to go somewhere near $11 to get the same bangs for the buck, so to speak. So we'll be following it day to day, and we'll certainly be looking at it. But after 8 days up, we're due for a little correction. Usually the weather will break for a day or two, and you'll get a sharp break, and you want to be watching to buy that break. Now, beans move in harmonics of 18 and 36. That seems to be the DNA for the soybean market, 18 cents and 36 cents. So the first thing you'd want to watch for is 18 cents. That would be about a 382 retracement back of the whole move that we ran up. Well, let's figure that out. We went 70 cents. 40 cents would be 28 cents. So around, that would be about right. Around 22 cents, 18 to 22 cents would be a 38% pullback in the November beans, and you'd want to be watching it. What's interesting is that the July beans were very, very strong too, which is quite unusual, because usually what happens is the spread between November and July starts to widen, or well, in this case it would be coming in. In other words, November beans are selling at a discount to the July, and that spread would start to narrow. But the July soybeans were just as strong, means that there was some nearby demand also causing this. I mentioned on the show on Monday that the first sign that there was something really amiss here in the bean market was the fact that we had some mitigating weather over the weekend, and yet there was no protection being taken because there was no selling coming into the farmers' place where the co-ops where they sell the corn. At least that was the case in Martinsville, Illinois, where I checked, and certainly that's the case. They jumped another 45 cents a bushel since that time. So we want to watch what's going on at that time. We're having a breakdown today in gold and silver. They finally have sent out the notices of the funeral in Chicago. Silver is, I think the message is that the services will be sometime on Monday morning. Gold, they haven't decided when the services will be, but we look like we're heading really, really a lot lower in some of these things. So we have to be exceedingly careful here at these levels. Now, I wanted to take you on a trip here and take us to the what happened yesterday in these markets with the DAX, German DAXs. That's where it all started last night. Let's get this up here a little bit. I've got a couple of things that I wanted to run through today that I will be able to get to because I have plenty of time, but I wanted to do this first. Is if you take a look here at the DAX over the past 3 months, you'll see that we've had these 3 big rallies. You can see that by looking at the black lines that are on there that shows the rally, and you'll notice that these rallies are equal. Well, this is what we have going on today. Now, you'll notice that the 786 retracement of the last rally came in at 11,657, and the high today in the DAX was 11,642. So it came within about 15 points. And believe me, this thing really moves, folks. It doesn't take any prisoners, either up or down. And you have to have nerves of steel and the real cojones to get in and trade this one. If the margin is 20,000 euros, not dollars, euros, but it's 10 times the volatility of the S&P 500 E-mini. It's just, or even more, a minimum of 10 times. So that's the first one that I wanted to show you. Now, the next one that I wanted to bring to your attention is where we are coming in today. You'll see the same type of a scenario here, but what I've done is I put in the patterns that we look at. And as you can see, when the market made its top up there on April the 13th, we were making a beautiful butterfly pattern. The market had rallied 800 pips. The market broke down very badly into May. Then we had another really strong rally in exactly 800 pips. And then now we have rallied 800 pips off the bottom today. And that's been our high of the day so far. So whether that's going to be the same case or not, you know, we'll have to wait and see. But this was probably brought about by the Greek situation. Whether that's going to be rectified over a period of time or not, you know, I'm not really sure. So no one else is either. So it's not much of a problem. Now, in the overall stock market, we have a oh, I got the wrong one in there. Give me 1 second. I've got to find it. Just a second. Oh dear, Larry, I forgot to change the name on it. Darn it. Well, I'm going to have to bring it up at the break. I don't waste any time trying to mumble through some of these things, but it certainly looks like I've missed it somewhere. We'll find it in just a second, like I usually do right after I say I can't find it. I can't. I wanted to, Tom O'Brien had a real interesting talk about the Shanghai market, the fact that it's had this tremendous parabolic rally, and now we're having these big 4 and 5 and 6% swings each day. That market is really ripe for a total meltdown, and the reason why is the Asian people do not know how to sell short. Some of them don't even know what short selling is, and some of the stocks that they have, they can't even short. So that's a situation that you don't want to be involved in when you get illiquidity, which will probably hit it. But I posted the chart in here for the Hang Seng, the Hong Kong market, and as you can see, we have come onto the area where we made the 786 retracement. We have a nice butterfly. It's pretty much the same pattern that we have in the New York Stock Exchange Index, but it's spread out over, this is a weekly chart, where the NYSE that we're looking at is basically the daily chart. That's primarily the thing that we're watching here. So I wanted to get this NYSE chart up here. The easiest way to do it is to pull it up. Ah, there we go. See, Larry, you can do it when the time is right. In fact, we'll be able to see it open today. Yesterday, we made a beautiful 786 retracement of the Gartley that I thought we saw on Monday, or excuse me, Friday of last week. We did go up a little bit higher. We came within 1 point of the actual exact number of 11,174. The high was 11,173. So we could easily make a slightly higher high today in that New York Stock Exchange Index and still be bearish. But folks, if we get much above 11,200 or so in the New York Stock Exchange Index, I have to send up the white flag for a while. I really believe that we're coming down big time. I mean, everything is there that you could possibly ask for. You look at margin debt, you look at bullish consensus, and most of all, you look at the complacency in the market. And then you look at the fact that the Federal Reserve has our back. And if you believe that, I still have 2 shares of the Brooklyn Bridge. They don't care about your back. I can promise you that. They're there for the Federal Reserve and the banks that represent them. And if you don't believe that, let's go back and look at history. Mr. Bernanke in October of 2007 said, gee, everything looks fine to me. There doesn't seem to be any subprime problem anywhere. And you can see what happened. The market gave back 60% of its value. So what they say and what they do can be 2 different things. Yesterday, Chairman Yellen was on the House Committee of Finance, and she refused to testify about a situation where some leakage of information about the Federal Reserve operations occurred during 2012. She would not testify about that. She took the, I guess she took the Fifth Amendment or whatever they take, Fifth of Scotch. I don't know what it was, but that's what they said. That she didn't have to testify, and so she didn't. So what are you going to do? You're not going to get any information out of somebody that can't talk. That's for sure. That's the bottom line of what we're watching here. We're having a situation here in Treasury bonds where we're breaking down pretty badly here. We're below the 786 level right now. I wanted to bring this out to show you because this looks like a real interesting situation that we have going on. Bonds look so very weak that it's really difficult to try to find anybody. And we have such a long bar down here that it's really difficult for anyone to even try to buy the bonds down in this level because they're just falling so rapidly, you know, without any help at all. And it looks like we're getting ready to go down and break out the 147 level, and that takes us down to 141. We've looked at that several times over the past on the weekly charts, and that's it appears, you know, what really is most probably going to happen if that's the case. But that hasn't happened as of yet, so we've got to just wait and see. But there is a lot of should have been a lot of support at the 148.13 level, and we're now below that. So it's telling us that we're most probably getting ready to go a whole lot lower. That's what it looks like on the bonds. The notes are the same way. We've been very bearish on these for quite some time, and what you want to do is you certainly want to be able to you know, come in and not risk very much if you're trying to go long bonds, which I certainly wouldn't recommend at this level because they're going lower because interest rates are going higher. We're going to take a little break here, folks, so we'll be right back after these few words from our customers.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, since we've been on the air here, I wanted to bring up the chart that we just got from our good friend Andy Fink in Berlin, Germany, who's a good friend of ours and good pattern recognition person. As you can see, he's posted his chart in here that he sent me today about the DAX. Today we hit the exact 1.27 of the high from June the 10th. It was also an exact 61% retracement of the high from May 26th, and it was also a 50% retracement from the high way back on April 9th. So you got a whole bunch of things in here completing this Gartley pattern up in this area. As long as it doesn't get above 11,650, you should be okay. The high has been 11,641 so far. It's trading a little bit below that right now, but this is the German DAX, which is the equivalent of our S&P, except that it's on steroids because the margin is so high and the contract value is so high. That's the real key. It's 20,000 euros margin for this to be traded. So just keep that in mind. Now, since we're talking about the euro here, we really should take a look at this because we've broken down badly here. I wanted to, this was one of the trades that we were watching really closely today because we had a beautiful Gartley form. It stayed for about 2 hours. This is an hourly chart here. And then once it gave up, once a Gartley fails, it's usually going to go to the 1.27 number. And once it went below 112.50, it was telling us that it was heading down most probably to 110.70. That's the 1.27 expansion off of the low that we made back on the 12th. Now, this is really a market that should be going ballistic to the upside because, well, not ballistic, but it should be going higher because they're basically saying that the euro is going to stay in the eurozone, and yet this is not what the euro currency is telling us. So whether that means anything, I don't know, but this is a huge market. This is far bigger than the DAX or the S&P or even the bond market. This is a monster market that has a lot of people handling it every day on both sides. So that's what it looks like. We've now taken out the lows from the 12th of June, 2 weeks ago. That pretty much tells you that you are heading down, you know, to the 110.70 level, which will be the 1.27 of that range. And it'll also be the 1.618 expansion of the range from the 17th of June. So those are the things that we're watching here with the euro. The pound, we focused on that on Monday. You know, the fact that it had been up 10 days in a row, it was looking to be a sale around that 159 level. And we're now trading in the 157, almost ready to break out to the downside to the 156 level. We're not very far away with that, so we'll see if that's going to be a valid thing to look at over a longer period of time. So that's the whole thing that we're keeping an eye on. We haven't, well, the stocks will be opening pretty soon. I'm anxious to see, you know, how much they're going to put up the New York Stock Exchange Index and what we're going to have to look up early in the morning. The breadth of the market is still not very good, folks. We got more advancing, you know, more stocks declining than advancing. And the other thing that's really negative that no one really talks about anymore, and that is the fact that the volume is really drying up. And basically what that means is the people that are long is when they get ready to leave, when they head for that corral door, and it's open there for that little bit of time, what's going to happen is they're not going to be able to all get out that same door at the same time. And that's where you're going to see some vacuums in the market. And, you know, the other thing that's going to bring this thing to a real wicked end, and wherever that is, I don't know, and I hope I'll be around when I see it, but, you know, is the margin debt. You know, we got record margin debt like we've never seen before. It's 50% higher than it was in 2007. And remember, no one saw any problems in 2007, but we certainly could see that with the debt that's out there now. And I'm talking not just the U.S. debt that we have with quantitative easing. I'm talking about corporate debt, debt for student loans. All these things are just, we've been living on a wall of credit because, you know, rates are so low, artificially low, and that's caused us to, you know, basically borrow too much. And when you borrow too much, you have to pay the pauper when the pauper rings the bell. So you got to be careful here. But we got a lot of vacuum spots in the market that could be very, very detrimental to your financial health if you're not careful. And being short is tough here too because, you know, the market keeps grinding higher and doesn't make any difference, news good or bad, it's still going higher. But that's what it should do. I believe in the natural law of the market. You know, it's going up, but it's, you know, it's going up very, very slowly, but it's still going up. But we'll have to see what happens over these next few days. We got a big astro thing coming. Oh, we have one other big astro event happening today I have to mention to you when we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the ETF for the U.S. dollar. As you can see, we made a double bottom down at that 61% retracement level. That's equivalent to the 114 level in the euro. As you know, the dollar index is 53% weighted by the euro. And when you add the yen, the pound, Japanese, and the Australian dollar, you're also looking at just a few more percent. But 53% of the index is based on the euro and versus the dollar. And as you can see, that's what's really made this move here. We had a big gap up on the ETF, that's why it's difficult to trade ETFs for Forex, because so much of the stuff happens overnight. By the time the market opens at 9:30 in New York, the move can pretty much be over, and that's what's happened today. Once we broke below 112.50, there was no support there. I mean, it stayed there for 2 hours, and then once it broke below there, it just drifted down, and it looks like it's heading towards, as we mentioned before, 110.70. I believe that was the number that John Logan is looking at, for a price level to be hit. So it's close to a 1.27 of the range that we've done so far in the month of June. But it's still early. Maybe things will change, but right now that's what it looks like, from a perspective of looking at it, during the day. That's pretty much the bottom line of what we're doing. We've got some good, looks like we have some pretty strong buying coming in today. We have the moon at apogee today. That means that it is as far away from the Earth as it possibly gets. These are the things that Pythagoras worked on back in the 7th century BC, back in the 580 BC, I guess. He knew that the Earth was 250,000 miles from the moon, and he had calculated that by using his Pythagorean theorem that we all learned when we were in high school and in college. And me, I learned it during the 5 years I was in the 5th grade. So those are the things that we've got to remember. The other thing that's happening is that there's a giant solar storm going on today. NASA announced that was going to hit the Earth today. That'll cause some disruptions in some types of communication that we have going on. And something else that I think is relatively important is Facebook passed Walmart in total capitalization, folks. It's been in business for 5 years, I believe, 4 or 5 years, and it's already passed Walmart. Social networking, passing Walmart. I mean, you're talking Walmart with thousands and thousands of employees. I believe they're the largest non-government employer in the country. But to see Facebook pass the value of Walmart is really, I imagine old Sam would be rolling over in his grave, Sam Walton, if he had to think about that. But that's what the computer stuff is all about. The people are attracted to it, and that's what makes it work. Apple's still under a little pressure. It's not doing as much as it should be, given the fact that it has all of the things that are necessary, to look at to see whether it's going to, go a lot higher. I still think it's heading towards 121, but I could be, totally wrong about that. We had a little bit of early buying in the market so far. The New York Stock Exchange Index has done very little. The euro is still under some pressure. It's right near the lows. We've got gold is held up. Looks like it's held 1179 level. We got down as low as 1176. Whether that's going to be a bounce or not, we'll have to give it a little bit more time to see if that's going to be the case or not. But right now, my main focus here is on the stock market, because this number that we're looking at in the S&P cash is just very, very important. I want to bring this to your attention because I've talked about it several times. And if it hits this line, I'm going to have to really reconsider going back to the 200-day moving average and the crossover of the 50-day moving average, because if we close above 214 in the cash index for the S&P, that's one of those numbers that Bryce Gilmore used to stand up and jumping down about. He said, if it gets above that number, he said, all of the things that I've worked on are no good. Now, the old high we made was at 21377, and the number that we're looking at is 21388. So we could easily make a higher high by a couple of ticks, but we can't get above 214 if this is going to be correct. That's basically the bottom line of what the geometry says. If you got to believe these numbers. The reason why they're so important, folks, if you went back and looked at the low from from March 5th, 2009, the exact low on that day, the 61% retracement, was the exact tick from the low on October the 19th, 1987, to the exact tick. And the 1987 low was the exact tick from the 1982 low, 618. So these are the things that that we're keeping in mind, that what we're watching, and see if that's going to be the case or not. So this is all part of what we're doing here, looking at some of these things. And I'm going to, since we've got a minute here, I wanted to show you something that I'm watching, whether this means much or not. But I just want to give you an idea of what the old man does here when he's sitting here acts like he's doing nothing. And sometimes I'm doing nothing. But this is a pattern that I'm looking at here in wheat. Now, wheat has been one of the weaker of the commodities, and as you can see here, we are rallying back to a 61% retracement up here at the 517 level. Now, we were lower this morning. We were down about 508, and now we've rallied up. We're getting ready to make new highs up here near the 61% retracement level. So what I will be doing at that spot is I'll be looking to put a short on around the 517.5 level and risk about 6 cents and my profit potential on this would be at least 12 to 18 cents. So that's what I'm following right now, on the wheat market. Whether it's going to happen or not, I don't know, but it's a perfect setup for me, because now I have, this being an hourly chart, I have several numbers, to work on. I've got all of yesterday's range that measures to 517. I got the 61% retracement from the high in June that measures at 517.5. So I got a whole bunch of things there that tell me that's where I should really take my shot if I want to look to be short this. And I'm certainly looking for some type of correction in the wheat, and so that's what I'll be watching. Let's take a quick look at the soybeans here and see how they're doing, because they have been the big daddy rabbit of this thing. And we'll just put the 5-minute up and see if they're rallying too. They're rallying, but not very much. They've sold off a little bit this morning. And how much did they sell off? They went from 68 down. They've only dropped 13 cents, and now they're just basically doing nothing. They're just hanging in there. Let's just put this chart in so you can see it. We had a break from early this morning. We rallied back to 61%, but that's all we've really done. We haven't done any more than that. So we'll just keep an eye on both the soybeans and the wheat. The wheat sets up better than the beans. First of all, you're not getting involved in a drought market. That's not the case with wheat, because it's already it's not in the growing part of the season. You don't have to worry about that. But it's tagged along, with the corn. And the other thing, we got something that I forgot to mention from our good friend Jim Twentyman. We talked about the Twentyman line when we were doing the thing with the banking index. And he sent me here it is right here. We sent the same Twentyman line here on the corn the other day. And it's a perfect example. The market breaks this trend line. It comes back to it one more time and tests it down at the 61% retracement level. And that gives its impetus for it to go higher. Now, when we look at this with the banking index, you're going to see pretty much the same thing, but from a much higher level, which it can happen from any time. So we want to pull this one up for the banking index and let you see the 20-man line, because we made new highs in the banking index now. Wow, that's another one that's looks like it's ready to go. And let's put this chart up and you can see the 20-man line. It acts basically like a catapult and making prices either go higher or lower. And so that's what we're keeping in mind here with this. Let's see, it gapped up in the banking index, which is a pretty big thing. That's another 3-drive pattern on the banking index right now. Holy cow. This is going to be interesting today, folks, because this is a very, very negative pattern if it works with all the gaps and everything. Gee, this is the banking index. If you had to put a gun to my head, I would certainly load the bullets and fire away at this one, because I don't think you have to risk more than $1 on this, and it's got at least $5 in it. It's the way it looks like from the cheap seats here. So we'll see if this is going to work or not, but we'll wait and let the market tell us what it wants to do. How are we doing? We got plenty of time here left. Wanted to check how our Goldman Sachs is doing, because it's been in a really strong uptrend here, and I'm short this, and it looks like I only got about $1.50 before I'm going to get stopped out of it. I shorted it at 215 with a stop at 218. We're at 217.35 right now, so it looks like that trade is probably under some pressure. Not going to make it, but we'll do one thing at a time. And if I lose it, it's less than 3%, so it's not a really big thing to look at. I'm also short the IWM, but that one actually is just not even hurting me at all. It's a few pennies out from where I sold it. So it's the Goldman Sachs one looks like it's going to go a little bit higher. As I look at it on even a shorter term basis here, let's just take a quick look at this. Look at this last little ABCD that we had here. Yeah, this should be it. This shouldn't get much higher than where it is right now, boys and girls, but sometimes that doesn't always mean it's not going to. That should be it right where we are right now. Let's just blow this up and then we'll put it into the room and let the folks see it here. And it's not uncommon for people want to call in and ask questions here at TFNN, which makes my job a whole lot easier. Number is 877-927-6648. So that's really be helpful if you did have some questions and call in. We do have someone in the den has asked a question about the astrostorm that is going on right now. That is electromagnetic stuff. They've done some studies on that does affect turns in the market. This lasts all day, and these solar storms are very, very powerful. No one understands exactly what happens with them, except that they are extremely powerful, and they're magnetic, so they affect electromagnetic stuff like telephones and internet and, you know, TVs and other things. You know, problems can arise, but those are the things that we're, you know, faced with today. But the main astro thing that we're looking at doesn't occur till July the 2nd, when we have a whole bunch of things occurring. We do have apogee today with the moon at the farthest away from the sun. It's at 256,000 miles now, and at perigee it's about 10,000 miles less when the moon is closest to the Earth. I don't know if any of you folks looked out in the sky the night before last when I told you about Venus and Jupiter right up against the moon. They were making this beautiful triangle there, a trine, and I don't know if you saw that, but it was really spectacular. They were extremely bright and made a beautiful picture of you know, the stars that are out there, because they're so many millions of miles away that we forget that they are spectacular when they hit these things. Okay, now I had a question about. No, I'm not even going to ask about the question about the Apple, because I just don't. You know, I've answered it so many times that it's very difficult. On the screen that I posted, I was only able to put up a half screen, because if I try to do a full screen, it messes up my sequence of charts, and then I'm not able to move on to the next group, and that's really what I'm interested to do. I'm trying to basically make it to this last break here that we have, and then I want to look at the New York Stock Exchange Index to see what it's doing, and then also to look at the cash S&P to see how close we are to this number of 213.88. That's a really important number from a geometric and Fibonacci sequence of numbers, because this is really big. Folks, this market might look bullish to you, but boy, I think that they're trying to fool you. We just have this low volume up here, and it just doesn't look very bullish to me, but I could be 100% wrong. We get above 214 in that cash, and I will be wrong. That's you just have to wait and see where it's going to go if it gets above that level. But until that time, I think you have to, you know, be really careful in here being long some of these things, because it can really get a little bit of nastiness on the downside. So be careful of that. That's really the only message that I can give you, is that it just doesn't look that good. Go back and look at history. You know, these bull markets run on volume, and this one's dropping volume. The breadth is hurting, and yet the markets are going higher, and that's because of the rotation. And you've got 531 stocks that are moving it, folks. It's not the thousands of stocks that are in the New York Stock Exchange Index. It's the 500 stocks in the S&P, the 30 stocks in the Dow, and the rest of those from the NASDAQ that come out of the S&P. That's 531 stocks. That's not enough. We'll look at the New York Stock Exchange Index and the cash S&P when we return.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I posted into Tiger TV the chart of the New York Stock Exchange Index. Right now, we're up a little bit from where we closed. We're looking at a number of 11,174. Whether it gets there or not, I don't know. But I've wrote on this chart that if we get above 11,212, that it's really hard to be short. Because that means we're probably going to break out in new high ground, and maybe all of a sudden, you know, there'll be a lot of volume come into the market then and get it to moving. I don't know why it would do that, but you have to keep that open because this could be totally wrong. And I've been, you know, smoking feathers for since May 18th, and we'll see. At least I wasn't short the whole way up on this last run because we had such a perfect bottom down there. On June the 8th and 9th when we had the Mercury, you know, going direct. So we don't have anything like that again until July the 2nd when we have a whole bunch of stuff coming together. So we could go straight up into that, or we could come down into that. So that's the key. Now we've had a request to take a look at a stock that is rather low priced. It's down around the $2 level. I don't usually look at stocks that are under $5 a share because, you know, that's pretty much, you know, they don't go, they just don't make it if they get under $500 or $5 a share. Most stocks ended up going bankrupt, but I don't know if this is an index or what it is, but we'll see if this is going to be anything at all. It's got a lot of support at $2. It's been here for 2 months. That's pretty much the bottom line of what you're looking at. So you've got to be able to say that it's got to have some support there. If you're in this for a long time, I think you're in it for the duration, would be my guess. That's the way I look at it. Now I wanted to take the time here to look at the. We've got just a few minutes left. I want to be able to look at the chart of the cash S&P, because that number that we're looking at is very, very important. Because that will tell me whether we're looking. Here we go. We're going to be looking at it. Oh, we're a long way from it. We're a long way from yesterday's high yet. We're trading at 212.25. We've got to get the market moving. We're going to have to get the S&P up around 21.24 to get close to that number, would be my guess. So that's it, folks. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.